Greetings, Dr. Jeffrey Scott, and this is my weekend market update for July 30th, 2023. If you are new to my channel, please click subscribe, hit the alarm so you'll get notified when I put these up. If you're not new, welcome back. My email address is shown here, hgsidoc@gmail.com. If you have comments to make, positive, negative, please keep the negative ones constructive. I'm more than happy to look at them. And I have changed my approach and shortened these over the years from those comments. I entitled this week, Can Goldilocks Resist the Bear Attacks? Boy, was Thursday a rough day for me. It really looked like the bear was back. And then Friday, it wasn't an equal and opposite. It was more than equal. It was reversed all the losses and then some. So I think the market's confused here. And let's talk about what I see. Again, here's my email address. Thank you for being here. Help me get to 1,000 subscribers would be great. Disclaimer, this is for educational purposes only. Any recommendations are in the spirit of education and not investment advice. I am a doctor, not a broker. I am independent. I've paid for the tools that I use. I now have tools available for a number of different platforms, all developed by different folks, so there's no relationship between them. But I may sell some of those tools, but I'm still independent from the platforms. Trading involves risk, and you are solely responsible for any investment decisions you make. I do a daily video at stocksanddocs.com daily when I'm not traveling. If I'm traveling, I miss a few, but you'll get 5 to 10 minutes of what I think is going on in the market, what I like, what I don't like, and what I'm looking at. Not investment advice, just education. Major markets tell the story. Wow. That's all I can say is wow. Imagine if you went to sleep October 13th or October 12th of 2022 and you just woke up today. You went to sleep in what was a horrendous bear market. And now, even though we're still talking about, is this a bull, is this a rally, whatever, look at the numbers here. Since October 13th, now approaching not trading days, but days since the lows, even the IWM is in a new bull. So being led by the Qs and the NASDAQ, then the spiders, we are in a bull market, folks. Believe it or not, look at those returns off of the lows. On the week, it was a very good week. NASDAQ led, um, doubled the other performers. The Russell and the spiders were up 1%. You can see we were strong on Friday. And frankly, much of the market gains on the first 3 days were taken out by the Thursday sell-off, and most of the weekly gains came on Friday. On the spider, it was all the gains. Interesting week. If you look at the sectors, you can see all the sectors except for utilities and real estate. Defensive sectors are within 10% of their 52-week highs. And you can also see that being led on the week here, 5% on communications. Materials moved up, so that's new. Technology still there. Discretionary. Materials is the different one. If we look at the Q Edge tools to give you a sense of market breadth and how the market did on the week, sectors 91% were up, 72% of industry groups were up on Friday. These are Fridays, and 68% of stocks. Interesting, you now have a peak of stocks below the Bollinger Bands and a peak above. A week ago, there was nothing below. In fact, if we look out at 1 week, 2 weeks, or 10 weeks at the pie chart, or excuse me, 1 month on the pie charts, you could see that looking at a 2-day view, which included Thursday sell-off, is the only view that's got any negativity to it. You could see the delta between the two on Thursday. 11 out of 11 sectors were down, and on Friday, 10 out of 11 were up, and the only one that wasn't up was utilities, which was pretty flat. Now, this is a worksheet. I didn't do this. I love it, though. It's 49 bucks. Pay once. You don't pay for data. It runs in Excel. A guy named Nick Drendel, who just popped up on my Twitter feed one day, and I took a look at what he was offering. Here's his email. Mention you mdonk at mindspring.com or Jeffrey Scott. When you buy it, I'd appreciate it. Not that I get anything, but look at this. It tells me during the day performance that you can see ARC was up 5.48% on Friday after getting hammered, frankly, on Thursday. Not only was it up, you could see it was up a lot from the open. You could see where it closed in its range. It closed up at the top. You can see the pattern of the moving averages. You want to see the 8 above the 21 above the 50 of the 200. You can get an idea of breadth by what percent are above or below the different moving averages. You can see when we look out 50 days, everything is above the moving average, or a high percentage of stocks are above the moving average. You can look at new high, new lows, and then performance, and look at China on the week. Wow. In fact, if you look at the 5-day change, the weakness was solar, gold miners, and biotech. I think this is very useful to look at during the day. That's why I bring it to you, because it's providing value to me. So markets and the rates both rose on the week. Not much rise, but rise in the 10-year, rise in the 30-year. Still have to wonder about a recession. I've now moved into the camp that, first of all, if I say recessions will happen someday, I guarantee I'm correct because they're going to happen. I just don't think one's around the corner. I think the concern is the massive yield conversion, especially the 10 versus 3, and that when we get the yield inversions, we get a recession when they correct. We don't see any evidence of credit tightening, and the diffusion index, which was in we're going to have a recession level, has corrected. So I leave a question mark there. Breadth is mixed after Thursday's sell-off. Stocks above the 200, stocks above the 40, both eased a bit. The 12-week new high, new low is moving up towards the top. None of this is in a signal range, so it doesn't say we have to stop. Current buckets, two-thirds of stocks are in the S&P 1500 are above the midline of the S&P 1500. Are there Bollinger Bands? That's bullish. And you could see some below and some above, but really no signal there. Interestingly, on Tuesday, on the NASDAQ, we had a Hindenburg Omen signal. I don't know what to make of it. A Hindenburg Omen signal usually occurs at market tops. It occurs when there is a lot of rotation from the strong hands, the institutions, to the weak hands, the small guys like us. It's not confirmed, although I guess the timing wise it did confirm the prior ones. It just, to me, it just talks about the risk, and you could see that we saw new lows come in on the NASDAQ. The NYSE continues extremely strong. And oh, by the way, yes, I know that the classic Hindenburg Omen is pretty much tied directly to the NYSE. I use the NASDAQ because different makeup just gives me a sense of what's going on. Up. All right, I changed the word from down to up. Markets were up on the week. You could see in my HDSI group performance analysis, most of the groups were in black. I'm up here somewhere. I was up 2.06, but really 50-50 on the stocks. Most of my move was in NEO, which was up over 40% on the week. You could see, first of all, notice the big spread in the numbers. There were some big movers like NEO and LI, but it was another rotation week where it wasn't high growth that was leading. Know your news and earnings. On the left, you could see we got some news this week. We got some manufacturing ISM. We got ADP employment. We got the monthly unemployment report on Thursday. That's often a big mover. And non-farm payrolls, monthly unemployment report is on Friday. We have jobless claims on Thursday as well. So there's a number of things here that can be movers, but probably the big news for the week is on the right-hand side, which is earnings Lollapalooza week 2. Amazon and Apple, Uber, among many, many, many others. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Market thoughts. We registered gains on this week despite all kinds of economic, central bank, and earnings news. In fact, we ended the week feeling just like we did in the beginning of the week. The Bank of Japan, I think, bombed the U.S. markets on Thursday when they came out and said that they're going to allow their yield curve to go up. And then they came and softened it on Friday. But I think the message is right. I mean, if you start to raise rates in Japan, it's going to hurt the carry trade where people are taking loans at minimal interest in Japan and buying stuff in the U.S. That will hurt the U.S. markets if rates go higher. The soft landing perspective continues to be in play, and the chances of another rate increase is about 25%. Didn't change much on the week. So my market timing signal is still long after Thursday's sell-off. We are long in the tooth with this market run, and I still think that a correction is likely. But for now, market looks to run higher, but at minimum, I expect more rotation. Bubbles and melt-ups can be lots of fun, but they don't end well, and I think that's something to remember. So let's go into wealth charts and see what I'm seeing in the markets. And let's start over here. Um, let's start with my weekly market signals. And for those who've not been here before, um, sort of my take off of Stan Weinstein's cycles in the market, stages rather. And I'm looking at price versus the 30-period WMA. I'm looking at my um, somewhat proprietary, I designed it with other people, indicator called the Bongo. Weekly charts, if price is above the 30-period WMA and the weekly Bongo is green, then I would say we're in buy mode, and you could see whether I look at spiders, Qs, Russell, or diamonds, those parameters are in place. So my timing model says it's still okay to be long. When I look at the indices, and let's just start with a 5-minute chart on the spiders, it's interesting what happened, I think, on Thursday and Friday. So let's look at that. Thursday saw the market gap open at the beginning, and the market was doing fine. At 1 o'clock, Japan had their announcement, and I looked for other news. There were some things about bank regulations, but frankly, to me, it looked like what led the market to sell off was the Japanese comments. Then I think they softened them, and the market gapped right back up on Friday. Didn't really move that much from where it gapped up, closed up here off the highs of the day, but one would have to say a successful day in the market on Friday. If we look at the spiders are in a nice uptrend after breaking out from this flag. Now, this is Thursday. There's nothing good to say about that. That is a high volume day with a bearish engulfing pattern, and that really has to put this rally at risk. Now, I look at Friday. Yes, I feel better. I got a little bottoming tail, big gap up off the start, finished up almost 1%. Still an inside bar, which means it may not mean anything. I think we got to be careful up here, but I'm not ready to throw out the bull, at least not yet. The Qs, very similar pattern, and actually closed up 1.82%, a big gap up. They held the gap and closed near the highs on Friday. The diamonds is another worrisome pattern. You had a bearish engulfing pattern and then a doji inside bar day. If you had to define and describe what a topping pattern looks like, boy, hasn't broken down yet, but boy, to me, that's one that shows risk, as does the Russell. Thursday, a big bearish engulfing pattern followed by an inside bar spinning top. So how do I put this all together? It ain't over till it's over. So right now the markets are still going higher, but I see, especially on the Dow and the Russell, a lot of risk there. The VIX on the week was actually down 2%, and on Friday it was down. The one day it was up was Thursday when it was up nearly 10%. The diamonds, you could see, the dollar ran up into the 50 and stalled, which is what I expected. I think that's an important point. You're about to have a golden cross with the 50 going above the 200. If the dollar starts to get strength, that can't be good for the market. And so that's something to watch. On the commodities front, with the dollar bouncing around, you can see gold is in a bit of a range here, going back to the 12th, but it's above the 50 and holding. If the Fed actually stops the raising, I bet gold just rockets higher. You could see silver also above the 50 sideways right now. Oil's been strong, especially with the weaker dollar. Maybe perhaps the fact people are realizing that when the Saudis say they're going to cut, they're going to cut. But more importantly, we got to replace our strategic reserves, so that might um, raise prices because of supply. Up 0.92 on Friday. Natural gas still doing nothing. And then the other perhaps concerning feature of the market is interest rates. Don't look horrible on Friday. They came down some. But if we look at the week, sorry about that. I always forget. Got to highlight the one I'm changing. Here we go. On the week, they were up 3.44%. So rates are going higher. The Fed's raised. I think that's still going to be a concern for the market. On breadth, very quickly, the TLT versus the spider not showing anything that suggests a recession is anywhere close. The fact that the next two have flattened to trended up is just telling me that the strength has broadened to the equal weights, not just the cap weighted. When I look at the sectors hourly, what I'm going to show you is that the weakness remains in staples, utilities, real estate, and healthcare, the so-called defensive sectors. Communications really picked up on Meta's earnings. Technology still doing fine, discretionary okay. And then in the middle are materials, financials, energy, and industrials. If I go into my stock scanners, and let's just go into the heat map, take a look at the S&P 500, you could see that total different look than it would have looked on Thursday, but mostly up. And I can look at the NASDAQ 100, the Russell 2000. You're going to see a sea of green. On the wealth scanner, you're going to see a big improvement from Thursday where almost everything on my list is above 800, led by gasoline, commodities, and oil. Now just start to think about it. If we have a continued bull market, do you think it'll be led by commodities, gasoline, and oil? Probably not a great sign for the bulls. Then we've got a bunch of indices. We've got the S&P 1500. That's good. Banks, regional banks, pharma, transportation. Here's your spiders, spider growth, oil production, NASDAQ composite, and retail, all at 800, near 800 or above. Much more bullish picture. Now, during my educational program today for the owners of my marketplace package, we created a group for refiners, drillers, because if gas is strong, then these should be strong. And what we were looking at was, I think we like to couple these, but we spent a lot of time looking at Imperial Oil. It's in a nice uptrend from 44 to 54 going back to June. So that's a 20% plus move in less than 2 months. Breaking out here after a little bit of a flag on good volume. Volume breakout momentum, recent squeeze, relative strength and OBV look good. That was one. Several of these, like Chesapeake, are still trading below the 200. I prefer to buy them when they're above. And then the sort of surprising, but maybe it shouldn't be, used to be that coal stocks seem to look like natural gas, and natural gas has been weak. But I've got CNX, which is a coal stock, breaking out here. And this is a pretty nice looking chart on massive volume. Now, on wealth charts, I see a little green circle there. I clicked on it. They didn't even beat their earnings, yet they're breaking out, which is interesting. Tidewater is a oil services stock that's been a nice runner. Is it ready to run again after a nice little base? It might be. I love top-down investing. I started by looking at the markets. I said I'm still long. I looked at gasoline as strong, and the things that build gasoline are some of the things that we just looked at. Integrated oils, MLPs, producers. So there's things right there. Now, I also like to do my scanner by looking at some of the leading stocks in the market. So I have a list that I create that I put the combo code in. Now, you have to have wealth charts. Oh, I've got a visitor here, my little granddaughter, so let me put it on pause. Okay, so we're looking at the combo leaders. Sorry about that. I got an almost 2-year-old granddaughter who just walked in and wanted to give me a kiss. And I love the markets, but that's much more fun. So what I've done here is I pulled up a list I call my combo list, which is a list of leading stocks. It comes from various places. It captures a lot of the stocks that are moving in the market, and I use it as a aggressive, as a good place to go fishing for stocks. You'll notice up here I've got 5 different buttons. 4 of them are bullish, and one of them is bearish. So we're bullish. Let's look at pullbacks in an uptrend, rank it by number of dots. And you could see that comes right up to the top is Arbor Realty Trust. Talked about this at my training session today. What a beautiful move. You know, real estate's been weak, but not this one. Breakout on big volume, gap up here, momentum, relative strength OBV. This pays a big dividend. We talked about that. That looks interesting. Now, is it extended? Absolutely. Look at the weekly chart. But it pays a double-digit dividend. This one looks very interesting. And what I'm looking at here is 17 in green, 50 in yellow, 200 in red, moving averages. We'll ignore the little triangles and circles. Those are a couple of sub-indicators I use. The impulses represent gap, volume, breakout, and momentum. This is a squeeze. This is a PSAR. This is my bongo indicator in 3 different time frames, which is a trending indicator. This is my measurement of extension. And then this is relative strength and on-balance volume. The perfect stock to me is one that has impulse indicators and relative strength and OBV breaking above the moving averages here, and I like to buy off as support. So ABR looks interesting, a little bit extended. Next on the list is a healthcare facilities, I believe mental health facilities. Kind of a choppy looking chart, but when I did this, is this coming out of a cup and a handle and a breakout? I think ACHC looks interesting. It's got the 4 dots. This here tells me that it was in a recent downtrend on the daily and turned up. The weekly's been an uptrend. I don't like the fact that in a longer term it's in a downtrend. I'd probably pass that one. BJ's Restaurant breaking out on volume. Here's another beautiful chart, Beazer Homes. Now, at some point, the housing has is going to run its course. It was a better buy down here, but you could see even down here it looked extended, and it had big volume, gap volume, breakout momentum, relative strength and OBV. It's given the same signal it's given here. It gave here as well. Beazer Homes looks interesting. CMRE, when I looked at it, a bunch of shippers that are in the marine shippers, oil and gas, a number of them are breaking out. Some of them have some good dividends. CMRE, Customary, is another one of those. Again, probably tied a little bit to those oil prices. Isn't this cool where I can just put a list of good stocks into a basket? I'm looking for pullbacks and uptrends. Here's your uptrend, there's your pullback and your breakout, and one after another. I think that this, look, I don't know what Coursera does. Interesting day, massive volume with a big bottoming tail. Here's one, KLAC had great earnings. This was a beautiful pattern here, but the buy time to me was back here when it took out the 50. Notice if you look down, you've got a volume breakout momentum and relative strength and OBV strong. Here it's getting a little bit long in the tooth, breaking out from a high base, probably a higher risk of failure, but that looks pretty nice as well. How about the Chinese EVs? Here's LI, what a great move. My big mover on the week was NEO, and these things are going vertical, and part of it's because one of the others, XPEV, I think had an investment from Volkswagen. Whatever, it's good to make money, and these really broke out. Would I buy these things? Probably not. They're extended. Roku certainly helped ARKK on Friday, breaking out after a lot of sideways action for some period of time. And Skechers, you know, there's a lot of things here. Go do your homework. I'm not telling you what to buy. I'm just showing you how I use my tools to find some stocks that look very interesting. So it's kind of a loosey base, but breaking out here is Skechers. Now that was pullbacks and uptrends. If I want to find the stocks that are like rockets, a lot of them are the same, and I'm buying stocks. You can see the rocket formation there. And this is one we talked about this morning, Chart Industries, a flag formation and a breakout on Friday with massive volume is one I'm going to be looking at. I have one that's called bottom poppers where I'm going to look for stocks that have been beaten down and are showing some interesting activity. So here's one. This is EuroNav, which is in that marine shipping world. And you can see it's giving me some green dots. But this is when it's a bottom popper to me. It's been beaten up. Both the weekly and their monthly bongos are red. One can see the daily bongo green. Just tells me that it's starting a short-term uptrend. Tennessee Music is another one that's been destroyed. I got to get it above these moving averages, but it had three green dots in the setting of a stock that's been in a downtrend, typically a turnaround play. And then the other of the four bullish ones I look for is Momo Up, and these are just stocks that have lots of dots. Everything else is irrelevant. Here's Dada, Nexus. Um, you know, it's below the 200. Smart people have told me nothing good ever happens below the 200. Eventually, it's going to get above the 200. There's a lot of green dots there. That tells me it's got momentum coming into the name. Just something that I would follow. So, just to summarize, I know this was a quick one today, but I think people like them quick. The market is still strong. The risk is higher. Commodities leading is not a great thing, and rotation is to be expected. But we look through, looks safe to still be long here. My timing signal still says that. In some areas, it looks like we're melting up. For now, good luck in the markets. Stops still matter, and we'll see you next week.